Welcome to the Deep Dive, where we cut through the noise and get straight to what matters. Look, if you've been watching the financial world, you know digital assets aren't just some niche thing anymore.
Not at all. It's evolving incredibly fast.
Yeah, the landscape is changing, and major institutional players are really starting to lean in, looking to get involved seriously.
It's true. That shift is, well, it's undeniable, and it's creating this fascinating new frontier for capital.
And speaking of major players making a splash, this deep dive is all about one in particular, Bullish. They're an institutional-grade crypto exchange, and they're hitting the public markets with a big IPO.
Yep. So our mission today is really to unpack everything you need to know about Bullish. We're going to cover, where they came from, their foundation.
Their financials, of course.
Exactly. Financials, their big plans, what their key strengths are, and crucially, the significant risks they face. Because this market is, let's be honest, incredibly dynamic.
Absolutely. And to give you this comprehensive view, we've distilled insights from various places, reports from Reuters, Investopedia, stock analysis.
Yeah.
Getting a full picture.
Right.
So buckle up. We're diving deep into Bullish. Okay, so before we really get into the nitty-gritty of the financials, maybe we should lay the groundwork. Who exactly is Bullish? What do they represent here?
Good place to start.
They're described as an institutional-grade crypto exchange founded just back in 2020. What does that term institutional grade actually mean in practice? And why is that so important for their whole strategy?
That's a great question. Institutional grade basically means they're building their platform not just for you or me, the individual trader, but specifically for the heavy hitters.
Like asset managers, hedge funds.
Exactly. Large asset managers, hedge funds, corporations, people with really sophisticated needs. And you see this in their regulatory footprint. It's global.
Right, not just one country.
No. Bullish runs a regulated digital asset trading platform in the US, Germany, Hong Kong, and Gibraltar. That multi-jurisdictional approach, plus a heavy focus on compliance, well, that's absolutely key if you want to attract the big institutional money.
And here's an interesting twist we found. They actually own CoinDesk, the crypto media outlet. Now, apart from just getting their name out there, what's the strategic play? Why own a media platform like that? Especially thinking about trust and maybe data.
Oh, it's a really significant move and maybe a bit overlooked sometimes. It's definitely more than just revenue diversification or brand recognition, though those are benefits. Owning CoinDesk gives Bullish this sort of proprietary window into real-time market sentiment news flow. Think of it like having a direct pulse on the industry chatter.
Interesting.
That kind of insight could potentially inform their trading algorithms, their market-making strategies, maybe even help them anticipate regulatory shifts. It could give them a real information edge over competitors.
That's a unique angle. Okay, and performance-wise, on the growth side, Bullish has seen some really rapid expansion. Their Q1 2025 average daily trading volume hit, what, $2.55 billion?
Yeah, a huge number.
And that's up 78% year over year. What does a jump like that really tell us about institutional adoption of crypto? Is it really happening?
It signals strong, and I'd say accelerating, interest from institutions. I mean, that kind of volume growth, especially in a relatively short time, and despite all the market volatility we see, it really suggests the big players are moving past just dipping their toes in. They're actively allocating serious capital into digital assets now. It's a pretty clear sign the market's maturing.
Okay, with that kind of growth, it makes sense they're looking to go public.
Okay.
So let's break down the IPO specifics for you, the listener. Bullish is heading to the NYSE, ticker BLSH.
And the price range they're looking at, the estimate right now, is between $28.10 and $31 per share.
Okay, how many shares are we talking?
They're offering 20.3 million shares initially. Plus, there's an option for the underwriters, the banks handling the deal, to buy another 3.045 million shares if demand is really hot.
Right, the overallotment or green shoe option.
Exactly. So potentially the gross proceeds could reach up to about $629.3 million before considering that extra share option.
And if they hit the top end of that price range, $31 a share, we're looking at a target valuation for the whole company of up to $4.23 billion.
A significant number.
And the date to watch. They're aiming for August 13th, 2025 for the IPO.
So let's connect this to the bigger picture. What did these numbers really mean? Well, it means Bullish is aiming for a very substantial entry into the public markets, especially for a company purely in the digital asset space.
Yeah, over $4 billion valuation is pretty hefty.
It really is. It speaks volumes not just about the perceived growth potential of this whole sector, but also, I think, the confidence from those institutional backers that this is a real long-term play attracting serious capital. It feels like a statement about the industry kind of coming of age.
Okay, now let's decode the finances. Because this
Okay.
is where it gets really interesting. There's this tension, right, between that rapid growth we just talked about and, well, current profitability.
Definitely tension.
Looking at recent performance, Bullish reported a net loss, a pretty big one, $348.6 million in the second quarter of 2025.
Oof. Yeah.
And that's a huge swing from Q2 2024, when they actually made a profit of $104.8 million.
Right.
How typical is this kind of loss for a company scaling up so fast in this specific space, digital assets? What's it say about their risk appetite?
That's a critical point to understand. Look, it's common for high-growth tech firms to burn cash chasing market share. We know that. But swinging from a decent profit to losing nearly $350 million in a quarter, that suggests a really aggressive strategy, maybe even a burn-the-boats kind of approach.
All in.
Yeah. It really highlights Bullish's conviction that capturing that institutional market share right now, even if it costs a fortune, is the absolute make-or-break play. It's a high-stakes gamble, really, on future dominance in this super competitive crypto landscape.
But, okay, despite that big loss figure, their 2024 revenue was solid. $250.3 million.
Yeah.
And that itself was up, what, almost 115% year over year.
Exactly. So you've got strong top-line growth happening, even with those profitability headwinds you mentioned.
The money's coming in. It's just going out faster right now.
Precisely. They're spending massively to build out their tech, their compliance, everything. But that revenue growth shows the investment is attracting business. Now, how do they plan to use the IPO money?
Right. Where's the cash going?
According to their S-1 filing, the official document, a big chunk is going to be converted into U.S. dollar-denominated stablecoins.
Okay, why stablecoins specifically?
They plan to use approved issuers, and the goal is to boost their market-making and liquidity capabilities. See, stablecoins allow for almost instant settlement in these volatile markets and makes their operations much more capital efficient. That's crucial for attracting and keeping those institutional traders who need speed and predictability.
Gotcha. So it greases the wheels of their core exchange business.
Exactly. Beyond that, they'll also use funds for more platform development, beefing up compliance, cybersecurity, which is always huge in crypto, and potentially making strategic acquisitions, plus general corporate stuff.
Sounds like they're really building out the whole ecosystem, reinforcing the foundations.
They certainly are. And, the players involved in backing this IPO are serious heavyweights. The lead underwriters are JP Morgan, Jefferies, and Citigroup, top-tier banks.
Yeah, you can't get much bigger than that.
Yeah.
And the confidence isn't just theoretical, right? We're seeing actual cash commitments from some very familiar names.
That's right. Institutional backers, including giants like BlackRock and ARK Invest, have already pre-committed a combined $200 million to the IPO.
Wow. BlackRock and ARK.
Yeah. And what's really fascinating isn't just the underwriters, but these anchor commitments and the other big backers involved, like Peter Thiel's Founders Fund, SoftBank Vision Fund.
So Thiel, SoftBank, BlackRock, ARK.
It's a powerful list. Their involvement signals immense confidence, immense credibility in Bullish's prospects. It's like a huge stamp of approval from the traditional finance world. It suggests they see Bullish not just as some fleeting crypto trend, but as a legitimate, potentially long-term player in digital assets.
That's a strong signal indeed. Okay, so we've seen the powerful backing, the big names, but for Bullish to really succeed long-term, it needs fundamental strength, right? What do you see as their most compelling advantage, their edge, especially when trying to pull institutional capital away from the established giants?
I think their laser focus on institutions is absolutely core. It's their main strength. Their order book technology, their whole compliance framework, it's all been designed from the ground up specifically to meet the really rigorous demands of large asset managers.
So not adapting a retail platform, but purpose-built.
Exactly. A lot of other exchanges kind of grew up serving retail first and then trying to bolt on institutional features. Bullish seems to have started with that institutional need in mind. That's a distinct competitive advantage when you're trying to attract serious long-term capital.
And they seem to be catching some helpful regulatory tailwinds, too, potentially. We've seen some legislative moves, new guidance lately, trying to reduce some of the uncertainty around digital assets.
That regulatory clarity, even if it's still evolving, is incredibly valuable. It shifts the conversation for institutions from, is this even legal or safe, to, okay, how do we actually operate and optimize within this framework?
Removes a barrier.
Definitely. For instance, there's the Genius Act being discussed, which aims to set up a clear federal framework just for stablecoins. That alone would bring much-needed certainty. And, clearer guidance from agencies under the Trump administration also helped institutions feel a bit more comfortable entering the space. It reduces compliance headaches and offers a clearer path to scale.
And then let's circle back to CoinDesk again. That media synergy we talked about, that also counts as a tailwind here, doesn't it?
It absolutely does. Owning CoinDesk, as we said, diversifies revenue for Bullish. But maybe more importantly, it significantly boosts their brand visibility and credibility within the whole crypto world. It's a smart cross-pollination of assets that really reinforces their market position.
Okay. Makes sense.
Yeah.
Of course, no venture, especially one this ambitious, comes without hurdles. Let's talk risks. What challenges does Bullish realistically face on the road ahead, starting with that regulatory environment you mentioned?
Yeah, despite some recent moves towards clarity, the fact remains. U.S. and global crypto regulations are still very much in flux. They're still being figured out.
A moving target.
Very much so. And that poses a significant risk. New rules could suddenly pop up imposing tougher capital requirements, new reporting burdens, or operational constraints. Any of that could directly hit Bullish's business model and potentially slow down that aggressive scaling they're planning.
And that other big point, the tension between growth and profitability we discussed, that's a major risk that, well, we can't just gloss over.
No, you really can't. Those quarterly losses are substantial. They're driven by heavy investment, sure, but also by working capital swings. The bottom line is sustained profitability just isn't demonstrated yet.
So what does that level of cash burn tell us? What's the risk there?
Well, that level of burn suggests, as I said, a super aggressive, almost do-or-die strategy. It makes you wonder about their runway, their cash reserves, if market conditions suddenly tighten up or if crypto winter returns. Or even just how sustainable this pace of investment really is compared to competitors who might be focused on getting profitable sooner. It's a calculated risk, definitely, but it's still a risk. They could face cash flow problems if institutional adoption doesn't pick up as fast as their projections assume.
And finally, let's talk competition. Because this space is not empty, it's crowded.
Oh, it's incredibly crowded, almost like a gladiatorial arena out there. Bullish is up against entrenched giants like Coinbase and Binance.us, both of which have massive retail user bases and brand recognition.
And then there's DeFi.
Exactly. Plus, you have all these emerging DeFi protocols, decentralized finance, which operate on a completely different model, a different philosophy altogether.
So different kinds of competitors.
Yeah, it's like Bullish, being institutionally focused, is trying to compete with, I don't know, a traditional investment bank, a massive retail brokerage like Walmart, and a decentralized autonomous organization all at the same time. Their institutional focus is their strength, their shield, but it also kind of narrows their immediate target market, making that fight for institutional order flow incredibly intense.
Okay, so for you, the listener, keeping track, what should you watch for in the immediate future? The Roadshow, where they pitch to big investors, launched in early August 2025. That helps gauge demand and set the final price.
Right. Then the actual pricing of the shares and the allocation, who gets how many shares, that's expected mid-August.
And then the big day, the trading debut, is currently estimated for August 13th, 2025.
So things to watch then are obviously the first day trading performance. Does it pop? Does it drop? And then further down the line, keep an eye out for any post-IPO lockup expiration.
Ah, yes, when insiders and early investors can start selling their shares.
Exactly. Sometimes that can put downward pressure on the stock price as more supply hits the market.
Okay, so let's try and bring this all together. Bullish's IPO, it really looks like a significant way to play the theme of institutional digital asset adoption, right?
Yeah.
And particularly stablecoin market making.
Yeah, definitely. And it's backed by those formidable investors and top-tier underwriters we mentioned, which gives it considerable weight and credibility, especially in the eyes of traditional finance.
However, and it's a big however, that journey to consistent profitability, actually making money quarter after quarter, and how they navigate this constantly shifting regulatory landscape, those are going to be absolutely critical factors.
They'll likely determine its long-term valuation and how the stock actually performs after the initial excitement wears off.
Which leads us to a final thought for you to maybe chew on.
Bullish's strategy, this heavy investment and growth now, despite the immediate losses, this big bet specifically on institutional adoption, maybe, that reflects the broader trajectory of the entire digital asset market itself.
Interesting point. So what does Bullish's gamble tell us about where finance might be heading? And maybe more importantly, how do we, as observers or potential investors, weigh that massive future potential against the very real present-day challenges and risks in what is still, let's face it, a very young, very nascent industry.
Yeah, something to think about. How do you balance that future vision against today's bottom line? That's the core question here, not just for Bullish, but for the whole space.